The year is 1402, as gondolas glide through the city with drivers singing songs and church bells ringing throughout the city. A couple screams outside your door over a loan. They want more time on the loan, and they want some debt to be forgiven. So you, like any good merchant who has been rudely awakened so early in the morning, throw your chamber pot on them and call some guards. "Buongiorno," your servant says, as he begins to light fireplaces across the home and open the windows to let in fresh air. Starting your day with a breakfast of Renaissance champions, you'll eat some leftover bread with wine and cheese to start your day. Your name is Aguise Bosciani Medici, and you're part of the powerful Medici family that once dominated northern Italy and European finances during the Middle Ages. You're one of the many bankers for the city of Venice and its merchants. Banks at this time were often family-run and international in their scale, with the Medici family having branches in London, Paris, Milan, Belgium, and other areas across Europe. Banks gave out loans to other merchants and producers, ranging from farmers, weavers, to glassmakers and goldsmiths. People would take out loans for varying reasons, either to pay off debts, to buy new tools, or to buy land or goods. These could then be traded into other areas for a higher price, or be used to fund a certain trade. Many banks were in highly fortified areas, such as castles, towers, or fortresses. However, yours is your house, though it is filled with many guards and a locked dungeon for storing gold. In your house, you have a bench and a desk set up, with a bookshelf nearby and plenty of paper and feather pens. A true banker's setup. You'll open your books and check your loan account, a steel box hidden under the floor with money for everyday loans. Not a ducat is missing. After writing how much is ready for loans, you will unlock the front door and bring in a guard to safeguard the entrance. Your first customer comes in for the day. Farmer Antonio needs 100 ducats, or $15,000 in today's currency, to buy some land and begin growing wine. Realizing this is a long-term loan rather than short-term, you'll have some questions to consider. Does his family have wine-growing experience? Does he have a stable income? Where will this vineyard be placed? If each answer is satisfactory, you'll give him the loan with no interest. At this time in history, it was frowned upon and viewed as sinful to charge interest on loans. This practice was known as usury, and in many places across Europe it was forbidden by the Catholic Church. So to skirt the ban on interest and still make some profit, you can charge late fees or demand payment in foreign currencies at high exchange rates. Hopefully, Antonio doesn't pay the loan on time or in ducats, for while anybody could pay the loan back on time, it would lead to them being permanently blacklisted by every bank in the region for their next loan, so it is expected that he pays back his loan late so you can charge a 10% fee for his lateness, a profit of 10 ducats. Your next customer walks in, a merchant named Silius, a Byzantine Greek looking to make a deposit. He explains that he traveled from Constantinople to Venice to sell wine and made a handsome profit. But he doesn't want to take back large sacks of gold with him in case he gets robbed. So he deposits 2,000 ducats, or $300,000 in today's money. You write him a receipt of the deposit, which he can then turn into an associated bank and receive the same amount he deposited in, minus a fee to pay. Though this may seem easy to forge, there were some checks on fraud or impersonation of these receipts. Since banks were family-run, many recognized the handwriting of their family members and could differentiate between a real receipt or a forgery. Other checks on fraud was a constant flow of messengers between bank branches, bringing up-to-date deposit receipts, accounts, and news. As you begin to eat your lunch, you'll have a fine meal of cooked pigeon, carrots, and a small salad topped with olives, with a glass of Tuscan red wine. Drinking your wine as your next customer walks in is a local grain merchant named Boshi, who distributes and trades in grain. He's taking a shipment of Venetian glass to Egypt to trade for grain, which he'll then bring back to the city to sell. He's asking for sea insurance for his venture. While it's illegal to charge interest on the loan, instead you can share in the profits. Known as commenda in Latin, sea loans were offered to traveling merchants, where their ship can be insured for shipwrecks or piracy, and if the merchant came back successful, they would have to share in profits with the insurer. Knowing the risks and possible awards to this venture, you agree to insure his ship for a sum of 5,000 ducats, or $750,000 in today's money. If he is successful, he'll share his profits with you, hopefully making a profit of 1,000 ducats in the process. As the day begins drawing to a close, your final customer comes in. With each step, you shudder in your chair and your heart begins to sink. A representative of the Pope Boniface IX has come in asking for a loan of 20,000 ducats, or $3 million in today's terms. For those outside of finances, this may sound wonderful. The Pope is asking for your help, but as a banker, it can be a death sentence. If you refuse, you can be excommunicated from the church, a sentence that could devastate your reputation and position in the Medici family and in Venice. If you accept, you may end up emptying your coffers on a loan, which you may never receive back in full. Having no real choice, you agree and give a receipt of 20,000 ducats to the representative. The church can then receive the deposit at a local branch in Rome. Many medieval bankers were very hesitant to provide loans or any funding to the papacy or to kings and queens, due to their position and power and the inability to extract fees or enforce banking regulations against them. It was more often than the case that bankers would never receive their loans back in full or receive their money back at all. During the Middle Ages, banking was incredibly risky. Your money could get stolen, wars and disease could kill debtors, not to mention your existence in financial security depended upon your local leaders and monarchs. Very easily, a local leader or monarch could refuse to pay back a loan, and there was no way of enforcing powerful monarchs or leaders to pay back a loan, especially if they're in control of a large army and powerful vassals. Other times, a monarch could just seize the bank's money, as is what happened to the Knights Templar in France when King Philip IV accused the Knights Templar of heresy to erase his debts. It ended with the French king executing and torturing many of the Knights Templar and taking over their treasury. After having your heart sink deep into your body and your wallet in tears, you close up shop and lock the doors, counting the coins and the deposits, writing them exactly and making detailed notes for the messenger to send to other branches. You lock the deposits in a sealed chest, where now you'll go eat your dinner and retire to bed. Normally, you would go out and join friends for dinner or check on the work of some local artists, but after giving out that loan, you just want to rest. This is a History First special, and it would be impossible to include every aspect and detail to medieval banking or life during the Renaissance. But I hope this gives some idea as to what medieval banking may have been like. Thank you for watching, and please make sure to share this video and subscribe.